It's tax time, and if you bought and sold any shares for the financial year, then you're likely to be owing tax if you've made any money at all. Since profits that you make from selling shares or from dividend payouts aren't withholding any tax like your regular income is, most people will need to pay for it out of their own pockets or take a reduced tax return. So today, let's go through how you can work out your tax owing as a shareholder. So let's start with the blank Google Sheets. We'll need to get your stock ticker, we'll need to get the quantity, the purchase price, and the purchase date. And if you've sold it, then we'll also need to get the sales price and the date that you sold the share at. Don't forget that we also need to get the dividend payouts that you received throughout the year as well. Normally there's 2 of them, so we'll just put dividend payout 1. We also need to check the franking amount, so normally it's around 100% or 0%, but you still need to put that in. And we'll need to do it again for the second dividend payout for the financial year. Okay, so if we put in a stock, for example, Macquarie Bank, let's say we purchased 20, let's say we purchased at $100 sometime in the financial year, doesn't matter when. Put a sales price that we sold at $120, which is a 20% profit. And let's say we sold it just before the end of the financial year ended. Dividend payouts, we'll make it realistic. We'll just have a look and see that they did pay out $2.50 at 40% franking in the first half. And then that reduced to $1.80 with the 40% franking in the second half of the year. Okay, we'll just justify all these and format all the appropriate columns with date and currency. I'll just quickly speed through all of these. Okay, so that looks good. That's all the information that you need to input so that we can work out the actual taxable amount. So in here, in column K, we need to find the taxable gain, or it could be a loss. And also we need to work out the franking credits that you've earned as part of holding the share to get the dividend payouts. Okay, so I've gone off camera to work out the formula on this cell, but essentially the logic is just checking if you've held the share for more than a year, then we will apply 50% capital gains tax discount. If you've lost money, then we'll have a negative there, and if you've gained money, we'll just have a positive value there. And for the franking credits column, we'll just be working out how much the company has already paid for you in terms of the company tax with respect to the franking percentage, and then applying that to the number of shares that you own. Okay, so in the next 3 columns, I might just add in some stock information, such as the stock name, current value, and current price, so that we can produce a nice looking pie graph later on. So we'll be using the Google Finance information, which actually pulls live data from the exchange. It will just have a 20-minute delay on there. So I'll just speed through this part where I just adjust all the cell widths to match what I put in, and I'll just fix up the justification on all of these. Okay, so the next couple of columns here I'm going to put as shares income and your regular income, and this is going to be the output of the actual spreadsheet. So we'll be putting in total taxable gain or a loss, which is the sum of all the cells in column K. We'll need a total franking credits cell, which is sum of all the cells in column L. And finally is the additional tax due to buying and selling shares. Just make that a bit wider. Okay, so on the regular income, so we'll need to get the taxable income that your job or salary actually dictates on your group certificate. We'll need a tax bracket that your salary falls into, and we'll just put a regular tax bill here with some formula to work out your actual tax obligations. And down here, we're going to put a financial year start and a financial year end with the dates that you can fill in yourself, and you can reuse this sheet over and over again just by changing the dates on these. Now to actually get started, we need to put in the taxable income. So let's just use Australia's average, which is around $70,000. That $70,000 is after all the expenses have been deducted as a result of doing your job. Now you can see that the tax bracket and the regular tax bill automatically comes up. And in the shares income column, we have the total taxable gain or loss and the total franking credits, which automatically update as you input your share buying and selling on the left-hand side. And the all-important additional taxes due to shares is updated based on the tax bracket that you're in for your regular income. That cell is the amount of money that you owe the ATO. If that's a positive amount, then you need to add that to your regular tax bill. If it's a negative amount, then deduct it from your regular tax bill. Okay, now I just need to make this sheet look a little bit nicer. What I'll do is I'll make everything that you need to enter in as a light bluish color, and everything that's automated to be a bright green color. So you don't need to touch anything in the green columns. So same on the shares income, we'll make that all green, and the regular income, all of that is green except for the taxable income, which will need information from you. And same with the financial years, that can be editable because you can use this year on year. And we'll add a few borders here just to make it look a bit nicer as well, so you can see the actual output of this spreadsheet. Okay, so now I've added in a nice pie graph which breaks down your portfolio to all the shares that you haven't sold yet, which you can do by just leaving the sales price and the sales date blank. So you can see that we've got Afterpay and CSL as pretty much 50-50. We can add in another share, let's say for example Webjet, add in the quantity, purchase price, purchase date, and leave the sales blank because we still hold that. And you can see that the pie chart automatically updates once you drag all the formulas down from the previous row. And that's looking pretty good. You can hover your mouse over the slices and it'll show you the share information and the percentage that you have in your portfolio, which is very handy. You can actually change the two financial year start and end data here to see what your portfolio looked like between two specific date ranges. But the most important information that this spreadsheet will show you is your additional taxes due to shares here, which for our example here means that we have to pay an additional $474 in taxes on top of our regular tax bill. If you continue entering all your information, that'll update automatically and allow you to make sure that you have enough money in your bank to pay your tax liabilities. And that's how you work out your tax bill if you bought any shares during the financial year. I'll leave a link in the description for this spreadsheet, and you can go to File and make a copy to save it to your own drive and start to put in all your share information. Let me know if this has been helpful for you and leave a comment in the description if you have any suggestions to improve this spreadsheet. Thanks for watching, and I'll see you in the next video.